is to move capital markets into blockchain, into new technology, to make it available to everybody, so anybody can become a global stakeholder, to buy into a company and into economic growth of the planet. Yeah, but before we start to speak about the future, let's recall some history of the technology of the financial system. Please play the video.
Tepid lemonade! Get out of it! Ratskins, dodo heads, tepid lemonade!
Hey, mate, I'll take 5 of your ratskins and one of those tepid lemonades.
It's one chicken, mate. It's not a chicken.
No, that's much better than a chicken, my friend. That is gold.
What?
Gold. The currency of the future.
Great, come back in the future. Ratskins,
No, mate, I don't think you understand. This has unlimited use.
Can I eat it?
No.
Can I wear it?
No.
Can I use it as firewood?
No.
It's starting to sound pretty limited, mate.
But you can melt it and then turn it into whatever you want.
Can I turn it into food?
No, you can't eat it.
Is this going to take long?
Hold on your horses, mate. We are dealing in futures here.
Oh, what's that? Is that a rock?
No, worse, it's cold.
Oh, cold. How do I get some cold?
Gold. I have people mining for it.
Oh, you have people. La-dee-da. We've got a rich one here, eh? What do you pay them with?
Gold.
Next!
No, they say that this currency could be worth 1,000 ratskins, maybe even more, in just a few years.
Says who?
The people with gold.
Fuck. Next!
Look, every economy ever has been controlled by the big chicken banks.
Next!
And this is our opportunity to get out from under the big chicken boots,
Me.
check up the market, and start taking back our economic independence. Are you with me?
No.
Really? Come on, man. Look, all my mates are doing it.
I'll just get your hand off it, all right? Everyone's trying to predict the next alt rock. First it was stone, then bronze, then iron, now gold. What can I even do with this shiny shit? Make fucking jewelry out of it or something?
Yes, you can do that. Great idea, because it's malleable. And, best part of all, there's fuck all of it. It's a finite resource.
Mate, I'll tell you what a finite resource is. My fucking patience, all right? Now, piss off!
You know what? Stuff it. I'm taking it back. It's like talking to my dad.
Yeah. Why don't you go discover avocado and smash it on toast, you dickhead?
Yeah, maybe I will.
Sorry, mate.
I'll have a dodo head, thanks.
Half a chicken. Piss on me, not you two.
Oh, no. This is way better than gold. It's silver, or as I like to call it, light gold cash. It's faster to mine. It's
Got to be the last one, surely. Ratskins, dodo heads, very tepid lemonade. Get it here. Desert.
Thank you. So this is how innovation gets through traditional systems. It's not easy. Society do not want to evolve too fast. Sometimes innovation is dangerous. Do you remember this guy, Bruno? He revealed that the Earth is circling around the sun, and society burned him with a fire, right? Because it was a risk that people wouldn't believe in God and in hell, and wouldn't stick to the rules, to the which are written in the Bible, right? So it's dangerous that something will go into chaos. And the challenge for the innovators and the innovation is to get into the working system without a big threat to it, and help it to upgrade, to get upgraded into something more efficient. And one of these big systems which is a very of high importance for the society is the capital markets. So the capital markets manages the planetary resources and the mankind future because there are investors who predict the cash flows and calculate the fundamental prices. And based on their prediction on cash flows, they reallocate in resources via investments, and thus reallocate human time and energy to do something different, which has a bigger potential. Right. So, how it works? Let's try next slide. So how the future capital market can work? Please click next slide. Okay. Okay. So this is the traditional system. You see there's squares, it's companies, it's organizations which are needed to organize circulation of stocks and other instruments. So corporation issue shares via register, and register via central depository distribute shares to custodies, and brokers have accounts at custodies, and clients, they have accounts at brokers. So there are several layers of organizations needed to organize issuance and transfer of shares. Without these entities, there will be double spending. If you put all of these roles into one organization, it will be black box where it is impossible to enforce violations of ownership of stocks. You wouldn't just find who changed the number and who transferred equity to other hands without approval from the real owner. That's why there are separate organizations which works as a checks and balances and makes eventually this asset ownership reliable. And then blockchain came in. And here how it looked like in blockchain. You don't need all of these organizations because you have blockchain all in one. So this state register is a smart contract which issues the token. And then central depository and custodies, they are all wallets controlled directly by clients via their private keys, via internet. So you remove 3 layers of organizations. You don't need 9 organizations. Yes, and also there should be also banks, which are not in this picture, but also they're important. So blockchain allows processing, issuance and ownership and processing of digital assets without all of this custodies, and this changes the way exchanges operate. Crypto exchanges, digital asset exchanges, they have a potential million clients, retail clients, which can't allow itself a regular exchange. Regular exchange business is to process all of these transactions, do clearing, do transfers between custodies, and thus they have mostly institutional clients and brokers. And the retail clients, their relationship and accounting is held by brokers. So very not direct user model. So LaToken is the largest IO player in the world. So our goal is to help startups, to help founders to connect with investors so they can get investment money to build their next big things. And also there are pre-IPO companies on the other range of liquidity. So the startups, private equity around A, B, and pre-IPO companies. This is our focus. And we are launching the first pre-IPO company token for the primary listing and crypto exchange in a few weeks. It works in this way. There is a token issuer who owns a share in a US-based fund which purchased SpaceX shares from its employees and the company itself. And this share in the fund is exchangeable into token. When SpaceX gets into IPO or other liquidity event, then fund cash out the token, right? And investor into the token gets the market opportunity and capital gain of the SpaceX from its stage pre-IPO to IPO. So, and why this is a big thing? So, capital markets eventually align incentives for the people with the economic performance, right? So, imagine if there are some group which time and energy can be used with a greater profits in the future, right? So, and this means that these future profits can be used by those who can get these profits to change the behavior of this group to get these profits. And this is something what is the capital markets is doing. So capital market move investments into other groups' hands and thus incentivize to change behavior of people. And other channels to change behavior is elections, and another one is market share of a company, right? And thus, because of this channel, because of this transmission of incentives, people create something valuable for the economy and cash flow, right? So there is a transmission of incentive from the future to create greater profits in the future to today's action. So people start to do something useful in the future. And if this system is more efficient and more smart and better available worldwide, then there are more people aligned with the economic prosperity of the planet. Yeah, and secondly, the participation in capital markets makes people stakeholders of the global economy, right? If you have shares in a company, and you will see real-time impact from news on the valuation of the company. So investors, they have a big incentives to learn how the world works, how actions of regulators, of companies, of politicians affect the future economic performance, because the capital market price this affects real time. So this is a very educative tool, and developed countries in America, for example, there are more than 50% are traders. So they have strong incentives to understand how economy works. And this result in a better prediction of policies outcomes. So traders, they are better voters. So they can predict what actually politician will deliver to them. And thus the system is far more sustainable. So there's less populism, less risky policies, because the voters, they are better, they are smarter at electing politicians. This is something which lacks in developing countries. So the less financial education and less understanding of what kind of policies are just populism, and what kind of policies will really deliver economic prosperity. That's why it's of paramount importance to bring capital markets to developing countries. And thanks to blockchain, that is starting to work right now. So that is our mission, to bring capital markets to everybody and to bring new type of assets to the market, especially startups with their great ideas and lack of funding. Guys, who trade securities? Are there in the room those who lose some of their money on trading? Are there traders in the room? It's just one trader. Don't be shy. Okay. What was your first experience in trading? Any?
So I started trading Bitcoin first, and so the experience was bad in that there wasn't a lot of infrastructure back then. So it was hard to find, you could say, liquidity, and the process wasn't very straightforward for the user, I would say.
Oh, thank you. Who would share his experience as well? It can be equities or Bitcoin. This is his first experience. Yes, please.
Well, my first experience trading was, I would say, quite good, because a few months after starting trading, I started developing algorithms for trading. So for me, it has been quite good from the beginning.
So it sounds positive, but by statistics, you should lose to more experienced traders. So first time you come in and trade, it's more likely that you will lose money to those who understand it better. So did you lose money?
Well, at the very beginning, I lost some money, but a few months later, the change.
Yeah. Wow, it's a good success. Not everybody recovers from this. So the point here is that this education comes at cost. So there's no free money on the table, right? And it's a real hard work to predict the future correctly, right? You should figure out how the system works and what will happen in the future, and where the value will be created. And there's a very big competition between investors. So there are millions of smart guys and girls. They are thinking about this. And those who get more and more sophisticated, they are successful. And those who are kind of not good at the modeling or just have little luck, they are removed from the market because they just lost their money. And so this is the cost for the learning. Do you remember this movie Wolf from Wall Street? Right? Yeah, the guys, they selling everything which is not valuable. They are calling their households and say to cowboys, you can be investor, buy it, right? And the guys on the other side of the phone, they do not understand what is it about, and they say, okay, you say it's cool to buy it, and then they lose money, right? Sometimes not lose, but most of them, they lose money, and many of them, they start to invest into education, to their kids, to financial education, and start to learn more how it works. What does it mean, the company cash flow? What does it mean, financial reporting, and so on? And this partly because of this Wolf of Wall Street. So there are sales guys who come into with their calls and start to ask people, buy it, and this means think about it and learn, right? And then the 50% of population in America are traders today, right? And they're far better educated because of this process, because of the trading and constant news reading. Yeah. So one more debate in the US is if non-accredited investors should have access to venture capital asset classes. So there are some statistics saying that venture capital assets are returning 20+% annually. So it's 3 times better than equities. And the problem with these assets is that there are far less information on the underlying asset, and thus regulators, they cut access to those who are not accredited, those who do not have a lot of money or a lot of investment experience. And this is to protect them from investments which are very risky and which they probably just do not understand. On the other hand, there is a question, why would someone will diminish freedom for poor people while still allowing to vote at elections, right? So investments is like voting. So people have something, their decision. Why not you allow them to invest into something which they don't understand, while invest into educating them? So what is better is to kind of make a barrier for them to invest and leave it to rich people, or make them equal, give them equal access, and have incentives to educate them, invest into financial education, and also give them more incentives to learn. So, and I think this is a debate resulted in Jobs Act in the US. So today there is a crowdfunding regulation which allows retail fundraising up to $1 million. So, but it's still very small business case now. However, which is a positive sign. So I encourage you guys to participate in these movements, to make the financial system and especially capital market accessible worldwide to everybody, starting from qualified investor and then to those who will just start to learn about this. I encourage you to discuss this. Are there any thoughts, maybe some experiences from investing or other ideas in the room, or we want to go for a weekend? All right, so thanks a lot for this opportunity to present what we do, and let's keep in contact. Thank you.